Hi there, everybody. Mike Petras here again, your star realtor, star and the Treasure Valley, back with another video to where I'm going to go ahead and discuss my predictions for what's going to happen in the real estate market right here in the Treasure Valley in 2022. We'll get to that right after this. Everybody, welcome back after the quick little break. Again, my name is Mike Petras. I am your star realtor of Star and the Treasure Valley, back with my predictions of what I think is going to happen here in the real estate market here in the Treasure Valley or the greater Boise, Idaho area, to those that are looking at a state and not familiar with the Treasure Valley as a term. But before we do dive into my thoughts about this and some data, please don't forget to hit that subscribe button down below so that you can constantly be in tune with all the awesome videos that I do come up with. Also hit that notification bell so that you're in tune when they do pop up. And if you are thinking about making a move here to the Treasure Valley, don't forget to click the link in the description below and go ahead and download my free relocation guide, which will give you all the information that you're looking for so that you can make the best informed decision before you decide to make the move. So let's go ahead and let's talk about my predictions and let's dive into it. All right, everybody, let's go ahead and let's just dive right into my predictions for 2022. And this really kind of starts off with the biggest elephant in the room that we do have, and that is just talking about inflation. As you all know, our inflation has just kind of gone through the roof since this new administration has taken hold.
Come on, man.
You can see it in gas prices. You can see it at the grocery store. You can see it everywhere you go. And as inflation goes up, everything goes up. Every cost goes up. Housing, rents, everything. And really, according to foxbusiness.com, in December, the consumer index price, or the consumer price index, rose 7% in December from a year ago, according to new Labor Department reports released on Wednesday, making it the fastest increase since June of 1982. Really? Wow. When inflation hit 7.1% back then. The CPI, which measures a bevy of goods ranging from gasoline and healthcare to grocery and rents, jumped 0.05% in 1 month period from November. It's crazy. Which marked the 7th consecutive month the gauge has been above 5%, which will likely amp up pressure on the Federal Reserve to begin hiking interest rates as soon as March, everyone, in order to combat the recent price surges. Hiking interest rates tends to create higher rates on consumers and business loans, which slows the economy by forcing them to cut back on spending. The other thing is that the Fed was printing money in order to kind of keep us afloat during the COVID pandemic by buying mortgage-backed securities, which we'll get to here in just a little bit and kind of talk about that a little bit more in detail, which they're starting to cut back on. The Federal Reserve will most likely raise interest rates earlier than anticipated to control this inflation. And it needs to happen. Our dollar needs to be worth something. There's just too much out there. And as we know, printing money is not the answer to our problems. This, in addition to ending its support for the economy in the form of large asset purchases, this will raise the cost of borrowing for consumers and reduce the excess demand for goods. So what I'm just trying to nail home here is that interest rates are really, really just spiraling out of control right now, which we all see, and it needs to be corrected. And one of the key ways for the Federal Reserve to correct this issue is to make changes in policy to raise the interest rates. As we can see, the one way that they were doing this was buying up mortgage-backed securities to keep us afloat, and they have really stopped doing that. As you can see by this graph, they have really dipped down, and what they're doing is basically putting it back in the hands of the investors to go ahead and buy, and they also tease them up by giving them better returns to do this. And in all, what this results in is increasing the interest rates in the mortgage industry. I've already talked about it, but just to kind of recap, we've talked about how the Federal Reserve has decided to stop the purchase of new mortgage bond holdings from what you saw in the previous clip. The Fed is the largest owner of these securities bought to keep mortgage rates low during COVID. Again, as I mentioned, has now turned into the largest seller. So again, as I mentioned, they're trying to attract the investors to absorb this inventory, and they will have a likely continued push up in the return, which all correlates to higher rates, the law of supply and demand. This is not news and not a surprise, especially to somebody like me. I've been really kind of watching this. In fact, I even took a look at some notes, from their prior meeting to where they said that if if inflation was to continue to spiral out of control going into December, they would consider doing this much earlier than what they originally wanted to do, which was Q3 of this year, of 2022, is when they were slating to do this. Now they're saying as early as March to April 2022, we could see this happen. I honestly believe it's going to be the beginning of March is when they're going to do this, if not even late February. This is just, again, spiraling out of control. It all depends on what's going to happen here in January. It has started early and mortgage rates will increase quickly. Another thing that we saw, from the prior graph is we have seen nearly 200 basis points of deterioration in over 2 weeks. Yeah, I mean, they're just selling these things off in like hotcakes. So what this basically boils down to is that on a $250,000 home, you would see a 2-point cost increase, which is roughly $5,000 in cost, or what translates into roughly a 0.5% increase in the rate. And yes, rates have increased 0.5% in just 2 weeks. Let's take a look at this graph. I'll go ahead and show you. So as we look here from just at the very, very beginning of this year, the mortgage rates for a 30-year fix were still sitting at 3.29%. Just in 1 week, they shot up to 3.64%. Now they have come down a little bit here, but considering that they're selling off their mortgage-backed securities back to investors, we're going to anticipate this to go higher. So no longer are they trying to float the economy the way that they're doing. They need to grab that money back. They need to take it out of circulation, and this is the way that they do it. So let's kind of take a look also on the other side, which would be inventory here in our counties in the Treasure Valley, as it compares to like Ada, Canyon, Gem, some of the outskirt counties, of course, Washington, Payette, and really kind of Idaho and the national as a whole. As you see inventory start to raise, and you see demand start to soften, of course, now we can start talking about a market correction to where housing prices can dip. Now, let's go ahead and tackle one thing before we do go off any further. Are we going to see a crash like we saw in 2008? And the answer to that question is unfortunately no, for those of you that are waiting for prices just to absolutely fall to rock bottom again. That is two separate situations. Back in 2008, if I can just kind of basically boil it down, it really quick, it really kind of came down to greed, selling off a lot of debt with no regulation, keeping the mortgage industry in line. I mean, for example, when you're just able to give away loans at stated income. So people were coming in and just saying, well, this is how much that I make. Here's my credit score, all this, and saying, hey, yeah, you're approved. That's a problem. There was no real checks and balances there. And then when finally the regulation caught up and said, hey, what are you doing? Everything went down with it. This is not going to be that deal. Now, in some previous videos, I have talked about, that the Boise market is overvalued, and it is very true. The Boise market is overvalued, and really as it pertains to, and there are some other factors that come into it, but the Boise value is overvalued because the median household income is lower, okay, than the median house value right now, and significantly lower. So it does need to catch up. So a market correction is going to be the only thing that could really kind of do that. But the question would be, how much of a market correction? And really that question comes down and needs to be monitored as we go along via how much the interest rates are really going to go up. As we can take a look over at this slide, we see that Ada County, of course, our inventory has been creeping up and up and up and up over the last few months, especially as this market has started to stagnate. you can see right there, the inventory is up 75.8% year over year. Our days on market has also come up, which is letting you know that some of the buyer demand is starting to taper off too as well. I mean, honestly, I still think the demand is excellent. We do have a lot of people, from what I can see in the data, coming in from out of state and bringing that money with them and being able to maybe purchase a lot of these homes just straight in cash, or they have great financial means to set up a really good mortgage to where it doesn't really hurt them. But in the case is that when the days on market tend to go up, and the holiday season was right there too, where buyers will kind of drop out of the market. But when the days on market go up too, it kind of lets you know that the buyer pool might be jumping out a bit. So again, the more inventory that we've got, and say if our buyer pool, okay, dips off, now we can start talking fully about a market correction. And if interest rates really go up, and this is what I'm going to emphasize, if interest rates really, really go up, it could chase away the buyer pool, creating more inventory, and then we could see that market correction pop up. And I actually do think that it could very well could be on the horizon. Even if we're looking at Canyon County, the inventory is up 174.4% year over year. And the days on market is also corrected. So it's also letting you know that inventory is on the rise. And the more that interest rates do go up, the more it's going to chase away some buyer pool and widen that gap to where we might see the actual market correction hit. Okay, now, a lot of you are probably thinking, well, buyers, you're probably thinking right now, Mike, thank you for this information. I'm just going to go ahead and I'm going to hold on, I'm going to wait for this market correction so that I can get a cheaper home price. Well, is that necessarily the deal? The first thing that I want to talk about here, okay, what if the market crashes? Okay, let's get away from that, because it's not going to crash down to levels like 2008. When people hear crash, they think of the Great Recession. They think of what happened, back then. And they say, oh, prices are going to go way, way down. Okay, it's just not going to be the deal. So now let's look that if you bought now, say a house at $350,000 based on 10% down, and you got an interest rate of 2.75%, your monthly payment would sit at $1,810. Okay, that's probably including PMI, because you're coming down from 20% conventional. Okay, but if the market were to correct itself and say remotely significantly correct itself, but the interest rates go up, look at this. Even at a 325.5 house based on 10% down, your interest rate at 4.25% is still looking at $1,917 per month. So where are the savings? It's not there. Interest rates are generally going to tilt it out. And that is the thing, buyers, that you really have to pay attention to here, is not so much is the market going to correct itself, which I actually think that it will. We'll get to that here in some of my final thoughts as we go along in this video. But you're really going to be paying the price more. And really, what are you going to be doing? You're going to be giving free money right away back to the bank. Here you go. Here's free money. When if you're looking right now, you can, at your purchase price and you had a lower interest rate, you're saving money. So really, buyers, it's one thing to keep in mind right now, and considering that the Fed, okay, is already in motion. They're already in motion to raise the interest rates, because inflation, due to our current administration, is just continuing to spiral out of control. And the only thing to put the check and balance on that is going to be the Fed changing policies, stopping buying the mortgage-backed securities like they're already doing, okay, and it's going to rise up the interest rate. So the question is how much? Now, I have really gotten out there. I've read all sorts of different articles. A lot of people think that it's just going to sit around 4, maybe low 4s, mid 4s. But there's other articles that say that it could go much higher than that. And it very well could. We're in trouble as a nation. Supply chains are backed up. All of this is happening to us. There's the money in circulation. There's just too much. In order to grab it up, that is going to be the one thing that they're going to have to do, is raise the interest rates, and we'll see how much. And all depending on how much they do raise the interest rates will also determine how many buyers jump out of the pool. So sellers, for you, if buyers jump out of the pool because they no longer can afford a house, that means more inventory on the market, which if the gap is high enough, will force you into a market correction. You're going to lose some value on your house. So is now that window? We will get to that in the summary too as well. But I think you can already kind of get the gist that this might be our window until the Fed actually raises the rates. Okay, so I went ahead and kind of dived into this. And what I want to just go ahead and do is just share some of my final thoughts with you, kind of really break this down in my final predictions of what I think is going to really happen in 2022 right after this. All right, everybody. Hey, thanks for hanging in there with me. Let's go ahead and let's talk about some of my final thoughts and really kind of summarize my predictions of what is going to happen here in 2022. As we previously discussed, during the presentation portion of this to show you the actual data that's happening out there, do I anticipate interest rates to go up? Absolutely, I do. And absolutely, I think they're going to come a lot sooner than later. I would actually more or less teeter probably on late February, if not very early March, as to when that's going to happen. And so as I see this going with inventory on the way up, okay, and potential interest rates being able to chase out the buyer pool or reduce the buyer pool, I see that gap spreading as we come along. And as that gap spreads and opens up, it's going to really open up that question, are we going to have a market correction coming up in 2022 that we should expect? And yes, I actually think that it's going to happen. If I were to guess at any time that we could start seeing a market correction here in the Treasure Valley, I would say probably later Q2, early Q3, and leading into Q4. But again, as prices also go down, I do see a return of the buyer pool to the market. Because as prices go down, people say, well, I'm going to get myself a better deal, and they're going to go out there. But buyers, keep in mind, are you going to get a better deal? As I mentioned with the very, very last slide that I did show, if interest rates do go up and say prices do come down, are you really saving money in the end? And the answer to that question is no, you're not going to. Interest rates are just going to suck away that money and take that money away from you and ruin your purchasing power. So right now, do I really think buyers that it's a great window for you to get in there and purchase a home before the policy changes happen to where the Fed raises the interest rates to combat our current inflation? I've been basically saying it in Mikey's monthly market updates for the last several months now. I really do think this is the window, and that window is going to really last, I'd say, up until March, if not earlier. So buyers, in summary, I'm going to say get in there while you can. We just don't know how much the Fed is really going to raise the interest rates to combat the inflation that we're seeing. They have an algorithm. They're going to work all this out mathematically, et cetera, and really kind of figure it out. But say if it goes up to 5%, 5.5%, then it's just going to get worse. It's just more money you're tossing away for really basically no good reason. It's just going to go right back to the bank to take that currency out of circulation to correct the inflation problem. So again, buyers, I really kind of strand this to you. Now is the window. Now is the window to get in there and to go out and buy. And of course, if you need professional representation, feel free to reach out to me. I'll give you my contact information here a little bit after I finish with the sellers. So sellers, if you're thinking about selling, well, again, I've said that we could see a market correction as early as late Q2, maybe even to early Q3, leading through Q4. Will some of that buyer pool come back if there is a market correction? Yeah, most likely. But how many? The interest rates could take a lot of that out. It will help to stabilize this market, which will bring down your home value. So if you're looking to sell right now, this is also a good window before the Fed decides to, the Fed initiates policies to raise the rates, but it's your window of opportunity to sell your home, get maximum value while you can, before things do correct themselves and interest rates do go up and we see more inventory hit, less demand. And again, as more inventory does hit the market, sellers, keep in mind that it's also harder to sell your home. There's more competition out there, more options for people to go to. So it's not like we had back about a year ago to where there was fever pitch competition. Our market did plateau out in terms of value, but the competition that you're seeing where you're getting multiple offers, up to maybe 30 offers, all bidding on your house, if you appropriately priced it correctly, those days are over. The buyer pool has definitely thinned itself out due to the inventory. Buyers have more options out there. So sellers really kind of consider that too. And of course, buyers, sellers, if you are looking for professional representation, please feel free to give me a call. You can reach out to me to area code 208-715-STAR. That's 208-715-7827. Would love to go ahead and discuss a lot of my predictions with you more in detail as we go along, and strategies on if you're looking to buy or sell in this market as we stand right now, or even if you wait after that time, we can still discuss it, because this is something, as if you did subscribe to my channel, is that I really kind of keep on top of to know what is happening in our market right here in the Treasure Valley. Well, thank you very much, everybody, for taking the time out of your day to watch this video. Again, if you want to get a hold of me, 208-715-STAR. If you're looking to shop too as well, you can also visit my website at www.yourstarrealtor.com, and you can begin your search right then and there as well. You'll also be able to see where you can download my app, which will go straight to your phone, and you can be able to start looking at properties and saving them there too as well. But I really do look forward to hearing from you. At least that way we can go ahead, work on your search together and figure out what it is you're looking for, so that I can, narrow it down and show you buyers what is available out here in the Treasure Valley. And of course, sellers, if you're looking to look, would love to set up an appointment with you and tell you how it is I can get you top dollar for your house. And that is, key thing right there. And what do you got to lose? It's 15 minutes of your time to sit down with me and listen to me kind of jabber off to you and let you know it's just a win-win and all. And if anything else, I can give you some tips on how to properly sell your home, say if you do not decide to go with me. But again, thank you very much. Don't forget to hit that subscribe button on the way out here, the notification bell too, so that you can constantly be in tune to all the videos that I do come up with as I come out with them. And of course, if you're thinking about making a move here to the Treasure Valley, click in the description below, click on the link for my free relocation guide. That way you have all the information that you're going to need to know before you decide to make the move right here to the greater Boise, Idaho area. Again, thank you, everybody. God bless you all. I look forward to the day that I call you my neighbor. And until the next video, take care. We'll talk then. Bye-bye.